Hey everybody, how you doing? It's Uncle Bruce here. Welcome one and all. The date today, November the 30th, 2021, and I wanted to talk to you today about the topic of the day is basically we're down a lot. Well, not a lot. We're down 480 points right now. We've been down over 500 points for the Dow Jones Industrial today, and that's not necessarily a bad thing. Now, people are going to say, Bruce, what are you talking about? 480-point drop? Come on, man. This is terrible. We've had a few down days in the last week or so, and we've backed off in the last month from our all-time highs. But I want to show you a chart of the market for about the last 2 years or so, and you'll notice that in the new year, 2 years ago, we had a major sell-off, and that was the initial COVID breakout, lockdown, global worry, shutdown of the markets. And we went from the high 20s down to 19,000 something points on the Dow. But look at the recovery. Look at how the Dow recovered only a few months later and then went on to hit newer all time highs. And here we are now uh, at this point in time, about November the 8th or so, hitting an all time high yet again for the Dow. Commentators on TV and elsewhere were commentating that, we've had 60 new high days this year, like all time high days. We haven't had a major correction. And a correction in the market, just so you know, is anywhere from 10 to 20%. That is a correction. That is a healthy sell off, flush out lousy investments and reload your account and get yourself reorganized and let's go from here. We haven't had one of those. We're off 2,000 points or so, ballpark, from our high. The high so far, this all-time high was 36,565, and we're in now 34,650 points. So not quite 2,000 points down. And a 10% correction would have been basically, or would be 3,656 points. And we're about 6% off right now. This is a good thing. Believe it or not, it's actually a good thing. And this sell off is not a big deal. When we don't get in one day a 4 or 5% letting out of the values, we're not getting a correction yet. We're getting sort of death by a thousand cuts, or we're seeing the markets down here and there, but no one big blowout, and that makes it harder to predict when the bottom hits. Now, traditionally, what can happen in markets like this is you can have a couple of weeks of wishy-washy performance and a drift lower and lower and lower. And then eventually you'll get to the point where you'll have that one day where you'll blow it all off. You'll test a couple support levels. You'll have a little mini rallies. Another support level will be breached, a little rally, and then everyone throws in the towel and they just get out of their positions, and you get this capitulation, and that's where the markets have a big drop off in one day, and heavy volume, which is what you want to see, not light volume, heavy volume, heavy down movement, a real flush out, and that could lead to a couple more days of wishy-washy trading, testing bottoms and little fake bounce outs, and then eventually the market has basically sold off of everything. It's oversold now, and then you have a quick rally that might get back a third, a quarter of the losses, 40% of the losses pretty quickly in a couple of trading days, 2, 3, 4, and then you kind of consolidate a while, and then you work your way through the last of any resistance, and you move your way back up. This, of course, is assuming that you have an underlying economy that's strong, assuming that you have underlying business conditions that are conducive to being able to do business. I got good news for you out there, folks. We have all that. We have an economy that is being funded with a lot of capital from the central bankers of the world, not just the Fed in the US, but the world's bankers are making a lot of capital available for business to be done. We have consumers who are sitting on pent up demands. We have consumers that would like to buy vehicles that can't find them right now. We have consumers that would like to buy vacations. They would like to buy furnishings. There's supply chain problems holding back many parts of our economy right now. So there are a huge number of consumers out there who would really like to contribute to the wellness of the economy, but they're just for one reason or another not able to do so. So all the ingredients are in place for a much higher market, and I can assure you, from where I sit with all this experience, having been in the stock market since 1978, 79, this market will hit new highs. And I'm not saying it will hit new highs next week or this year, but there will be new highs hit in the near future because this market is going to keep on chugging. Major corporations that these markets are, made of, basically, the Apples of the world, the Microsofts, and others are flowing phenomenal amounts of money and profits through their systems, and they will continue to compound their earnings. They are doing that well. And the fear in the market was that shares were overpriced for the earnings they were generating. And the reality is that every quarter when new earnings come out, it seems to this observer that in many cases, more cases than not, the shares are behind the earnings of the underlying corporation because the investors don't believe it. They don't believe that these companies can make the kind of money they're making in the middle of a pandemic, but they are. Now, we know there are losers in a pandemic. Without travel or without normal travel, airlines are losers. Hotels are losers. Theme parks are losers, of course. The thought was, though, that in a pandemic, all retailers would be losers. But the investing public has been surprised to note that these companies find ways to make money in the middle of a pandemic. They go e-commerce. They do curbside pickup. They do delivery. They find ways to make it work. Amazons of the world, they make money in a pandemic. We just pick up our phone and order what we want, and it arrives at our door a couple days later. Miracle. So there are companies that can do very well in a pandemic. Others not so well. But on the whole, the overall economy seems to continue to chug along. And a lot of folks, of course, have changed their lives and are working from home and will like to do that on an ongoing basis now. A lot of people have changed their lives to become consultants from home and never go back to an office setting again. More power to you. And then there are those folks who watch guys like me and others like me, I guess, to try to find a way to not go back to work and be self-reliant and work off your own assets. And these kinds of markets, coming back to the dip in the market, these are the perfect kind of markets for those of you out there who write call options against your portfolios. This is where you can write options. This is why you write options. In other words, when a market backs off, you're generating revenue to you because these calls you're writing depreciate at a faster rate than normal. You buy back calls and write newer calls for further out, and you continue to haul in income from investments you've already got, whether it's writing calls against stock like Apple or Microsoft or ETFs you have that trade on the open markets, whether you're writing calls against Goldman Sachs or some of the banking stocks, some of the retail stocks, whatever you hold, you can make money. For those of you who follow me a lot, of course, you know that we write options on, or I encourage you to write options on GameStop, on SoFi, Matterport, and other stocks. And then there are the poor man covered call strategies that you can also employ to write options against more expensive stock where you can't afford to buy 100 shares to at least be able to write a call option. You can buy a call option in the money and then write options against that. All of this can be learned if you want to, if you really want to understand it. And of course, you can always head to my website, stockmarketswithbruce.ca, and check out the classes. Head over here to the classes section there, and there are 10 classes there that I've put together, each one 2 hours long. How to write options, on stock you have, how to write options on stock that we talk about here all the time, how to earn income, how to understand how options work, how they depreciate, how they appreciate, how to roll over options from one series to another, put contracts, spreads. It just goes on and on and on. You don't have to learn it all. You don't have to know it all. You can basically be an option writer with basic knowledge of the market and the options market, and you can just stick to call options only and keep it simple, stupid. That is the motto here. Learn how to do it. Check out some of the classes for yourself. Watch our shows. We're live every day, 8:30 in the morning, 3:30 in the afternoon. Cover the markets in plain English, and we'll talk to you about why it's not a big deal. Right now, the Dow's down at 506 points. It's not a big deal. Relax. Nothing to panic about. Do not be a panic seller today. Learn how to handle the market. Make the market your slave. Don't be a slave to the market. There's another word I like to use. It starts with a B. Rhymes with itch. Make the market your itch. Thanks for joining me today, everybody. Catch the shows, check the classes, learn how to write options, make income whether the market goes up or down or sideways, make money all the time, like hedge funds. Check out my website and you'll learn how to do this yourself. Thanks for joining me today, and we'll see you next time, everybody. Bye for now.